This was not going to be the Fed meeting that actually was going to be the opportunity for any new announcements. His goal, as prior chairs have always maintained, is to keep it very, very steady during an election period. And of course, we know we're in an election period that is quite unlike any other. So this one has been protracted. That is an opportunity for there to be particular kinds of instability. From a market perspective, there has not been that instability. So if even there had been the inkling for him to do something extraordinary today, this was not it. And he made it very clear that while election results are going to matter, that the Fed was not going to be changing policy. Now, to the second part of what you asked, Wilf, in terms of is he going to need to do something later? Yes, there is a big challenge ahead, which essentially is this rebalancing of monetary and fiscal policy. And what exactly this new government is going to look like is going to present a challenge to the economy regarding the stimulus. And he's been asking for stimulus for quite a while, and it has not been forthcoming.
Paul McCulley, I'll come to you in terms of what we expect to play out throughout the rest of the year. And what does what we heard today and whether or not we get stimulus imply for the shape of the yield curve going forward?
First, I just want to say that Chair Powell is an extraordinary statesman. I thought his press conference today was one of his absolute best, of being reassuring that the Fed is all in, and at the same time saying that nurturing this recovery from COVID is going to require a all-of-government approach, and that he will work totally cooperatively with Congress and with Treasury. So I think he did a fantastic job. From the standpoint of your direct question, the longer we get a delay in stimulus, the more the yield curve will want to bullishly flatten with long rates coming down. But I think they are in an exceedingly low range. So in many respects, it's just noise. Rates across the curve are at rock bottom, give or take a few basis points one way or the other.
David, I think that the biggest question out there as it relates to the market narrative is, will the Fed do more in the absence of a giant fiscal stimulus, which is now one of the narratives for the markets right now, with the election increasingly shaping up to be potentially a Biden win and Republicans holding the Senate, and therefore not the trillions and trillions of dollars of stimulus the economy and the markets may need?
I think Chair Powell was asked that question directly, and he avoided it, which is probably the correct thing to do. But I think the answer, we all know, is yes, he will. They will do what it takes, and they will bring in more monetary stimulus if they believe that the fiscal side is not living up to expectations. So I think, it's clear that that's his answer. It's clear that they believe they have more ammunition. I believe they have more ammunition. I think there are many market participants that don't necessarily, but we have a pretty small balance sheet as a percentage of GDP compared to many other developed countries. I think we could do a lot more purchases. We could move in a lot of directions with the municipals. We could move in a lot of directions with funding facilities. So I don't see a lot of constraints. And I think Sarah was actually absolutely right. And Paul was right, too. He did a great job. He was a statesman. And Sarah was right that he's not going to do anything at this meeting. This is in the middle of a heated political election. This is when the Fed stands down, even if there was volatility. And we really are waiting till the end of the year next year to see if they're going to step this up anymore. In the most likely cases, they will.
Shepard Smith here. Thanks for watching CNBC on YouTube.